Welcome, everyone, to this final session of day one of the Modern Investor Summit. I'm Stéphane Renevier, a global markets analyst here at Finimize, and I'm joined today by our special guests, George Kaila, CEO of Prospero.ai, Jacques Caillou, founder and CEO of InvestAlert.ai, and Angeline Ong, financial analyst and global content editor at IG Group. And if we're gathered here today, it's to discuss AI and how it's changing the way investors discover opportunities. How are you all doing today?
Very well, thank you.
Good. Yeah, good to be here.
Great. Yeah,
Good.
happy to be here.
Great. I can sense the energy despite the late time of this session.
Exactly.
Okay, now some very quick housekeeping before we get into the meat of the subject. So first, I want to say a really huge thank you to our fabulous sponsors today, Prospero.ai and InvestAlert.ai. If you don't know them, please make sure you go and check what they're doing because they've got some really awesome products. If you haven't already, please introduce yourself in the chat box with your name and where you're tuning it from. And this will be a 20-minute discussion followed by 10 minutes of audience Q&A. So don't forget to ask your questions in the Q&A box below. Okay, folks, let's dive in. So Angeline, let's start with you and let's set the scene a little bit. How excited should retail investors be about AI?
I think it's a really interesting and exciting space. I mean, will it change the way that we trade? Yes, it will change the way, in which we approach trading. Will it revolutionize it? Well, it's still early days yet, right? We're still in the infancy of AI. In short, we don't know whether it's going to change it dramatically. ChatGPT, for example, has only been around for a while. I mean, the demo was early 2022, November, if I remember correctly. I mean, quants have used machine learning since the 50s. We've had algo trading, high frequency trading, which is an extension of algo. The difference now is it could be really becoming more mainstream.
Thanks. So actually, you've already sort of answered part of the next question. So I will turn the next question and I will ask our other two panelists. And I'll give bonus points for the punchiest answer. So please keep it short and sweet. So Jacques, let's start with you. You worked at a very successful hedge fund that employed systematic strategies. And let's face it, quant strategies have existed for decades, as Angeline has just said. So is AI truly a game changer, or is it just old wine in a new bottle?
Yeah, no, thanks for the question, Stefan. And again, great to be here. I'm on the revolutionary side, so I definitely think that we are on the brink of an incredible revolution there, affecting finance for sure. I make this sort of analogy with image recognition for skin cancer diagnostic, where we now know that machines are much more powerful than humans in that diagnostic. So think about a world where you'd have at your fingertips instant analysis of your investments, easy explainers on demand, a sandbox to test your own investment ideas, suggestions that fit your investment styles. You can think of many, many ways where AI can fit very, very well in that landscape, and having your guardrails sitting on your side and being lifted if you take a wrong turn and bringing you back on track. So definitely, I think that we are in that absolute revolution. There are risks. We can talk about this later on. And I think Ray Dalio on your conference early on alluded to these wealth gap problems. And I think that's obviously an important one.
Absolute revolution. That was definitely short and sweet. Thanks for that, Jack. George, is AI truly a game changer, or is it just old wine in a new bottle?
Yeah, I mean, obviously, hearing the wealth gap problems is a big thing for us at Prospero. We think that if that problem doesn't get better, we're going to see a lot of societal problems come up. But I think AI is a great hope. I agree with Jacques as an equalizer. And what I've seen, I saw something from Public Today that said 19% of retail investors use AI. And I think if you also look at things like 90% of the world's data being created in the last 2 years, this is just a completely new world we're in. And, you can also see the way hardware is accelerating. Look at what NVIDIA stock is doing, the demand for these chips. That is showing how real this is getting. And as it's getting more real, that is more and more ubiquitous that these benefits can become. I've also worked in AI for 13 years. and studied the history of it before that. And we've definitely seen some winters. So I think we're going to see some cycles where invariably it gets overhyped, and then there's disappointment and back and forth.
Yeah.
But I think the revolution is here, and it's going to get more and more momentum as time goes on.
The revolution is here. I like it. Angeline, anything to add on that question? Game changer or just old wine in a new bottle?
I think we have to be very specific when we talk about revolution for institutional or for retail investors, or for just, the general market. I think we also have to be careful about the data. AI is only as good as your data, and if your data is clean, data is intrinsically dirty. I mean, there's a reason why central banks have special units to scrub data. And therefore, if you are able to use AI on clean data sets that are dependable, then I think, yes, it can be revolutionary. Like the skin cancer that Jacques talked about, like, for example, forecasting something like a certain cancer that can be tracked by the AI. Yes, that is incredible, because we know that some machines, especially when it comes to optics, can see better and can detect things like cancer cells better than any human can. But at the same time, it has to be, when it comes to trading, it's based on data, and the data sets have to be clean. And at the moment, a lot of the data set is held by still a few big organizations. But what is exciting about this space, what I'd like to see, is democratization of the whole space. So basically enabling retail investors rather, who have a really good trading idea. And as Jacques rightly pointed out, they can now execute these ideas. You don't really have the need for that quant knowledge. No longer are you bound by that. With these technologies, you can take that forward, but you need to make sure that you have the right clean data.
Fully agree. Now let's try to make it a bit more practical. And George, the next question is for you. How can retail investors use AI to discover new investment opportunities?
Well, I think first, it's very important, and the point that Angeline made between institutions and retail is very important. And I would say first, Prospero kind of focuses on two things. We build great tools, AI tools that help you do better, but also process and approach. And I think where you start at finding investments, and what I see a lot, is retail investors complaining about manipulation. And I think you take that to a different example, and if you're on an airplane and someone's in first class or someone is in a private jet, I don't see anyone complaining very successfully about those tickets or that transportation being of a different class. And it's similar in the markets. Trades have different transportations, and the more money you have, the better transportation you're going to get. And I think that's where a lot of retail investors have to start, because there's a lot of opportunity. And back when I worked at my first value fund 20 years ago, I actually taught myself accounting to get that job. I think investing was an impenetrable fortress. There was information being exchanged on golf courses, and you just called your buddies up and you knew when they were going to buy or sell and move markets. But now, with all this dependence on alternative data, real-time credit card swipes, camera data, satellite images generated by real people, we actually open up an opportunity to take back some of that. And that's why, I think as part of that mindset, what I've been focused on for the last 13 years since I started my first AI company is looking for what I would call institutional trade signatures, visualizing that data, making it easy to interpret where institutions are making their bets. And I think harnessing that information, as Angeline was saying, getting good, clean information, especially with very reliable options pricing data, and seeing where institutions are going, those kinds of things will really help any investor and turbocharge you. Because starting in the example I gave, instead of doing this thing where you're out there with giants and robots and giant robots, you're going to get stepped on if you fight them. But one of the things we help people do, I say, is walk in their shadows. And I think that's just a really good mindset. And on the other side, I would say avoid magic bullets. Avoid all these companies promising you, they can beat the market, they can win in these nonlinear equation competitions, against Bridgewater, Renaissance Technologies, and that's ridiculous. I think at best, those people making those promises are swindlers. And the best way to look at that kind of thing is like a lot of these companies haven't even raised $100 million yet. And Bridgewater, that could be something they lose in a day in a rounding error and not look at anything. So it's unrealistic to think that anything you're looking at could win in a nonlinear equation competition against these large funds, which is why we focus on making it easier to see what they're doing and track. And our performance has been excellent, over 100% over the S&P 500 in 2022 and 2023 on average. And I think that I'll leave you all with this, where it's just that we lost an investing great, Charlie Munger, recently, and what he would always say is I'm not trying to be smart. I'm trying to be not stupid. And I think that is a really, really important part of it, where, some of the message I'm giving you is AI tools are great. They can arm you with better information. They can help you sort of easier see what institutions are doing. But, what you need to try to be doing is also understand that it's not magic. It's not easy. You need to put in the work. But if you put in the work, there are better tools ever to have you keep up with institutions and live in a whole new world than the world where Wall Street just passed information on to each other, and that was an impenetrable fortress.
Thanks a lot, George. Jacques, how can retail investors use AI to improve their investment process, from portfolio construction to risk management and performance analysis, all those things?
Great question, Stefan. Thanks for that. I'm going to give you, before I give you a couple of concrete examples, I'd just like to take stock a little bit of the discussions we just had. I think it's fair to say, as Angeline was saying, we've had the democratization of access to investing. That has already happened. We've had the collapse in trading fees. We've had the better UI. We've had the broadening out in terms of the investment choices. That's been, the last few years' revolution. But this has left a massive gap when it comes to enabling people to access tools on a wide scale. And that's really in the retail space, I think that the gap here is. And the AI tools, the quant tools remain very much in the hands of institutional players. So I think AI provides that very powerful mean to accelerate the access to investing strategies, investing advice, and also better portfolio risk management services in a very seamless way. And I think that this is critical, I think, to help the performance of retail investors. I mean, it's quite incredible that despite this revolution in the democratization of investing, the performance of returns of retail investors on average remains one of the poorest performance across all asset classes. And so I think we need absolutely to accelerate the deployment of tools to retail investors. So at InvestAlert, what we do is essentially we combine the wealth of data and we clean it. We also make use of the maturing of open banking and open finance, as well as the collapsing in the cost of data processing. And with that, we essentially bring about services which, only 10 years ago we could have not dreamt about. And let me give you a couple of sort of concrete examples on your questions. You were asking about portfolio construction and prediction. So I think the world of portfolio construction has been stuck for more than 50 years in that mean variance, so-called mean variance or Markowitz sort of world, which essentially assumes that the future is just a distribution of random shocks. Now, today, when you have a smart deployment of AI-based forecasting tools, you can really rethink entirely the way you can think about how to build a portfolio. There is a vast amount of evidence, whether it's academic research or practitioners, showing that you can use supervised or unsupervised learning tools, and they help you predict asset prices over different time horizons. So if you deploy those tools around your portfolio, you essentially are in a much, much better place to assess what assets in your portfolio are best exposed in terms of returns, or in fact having the alarm bells ringing to tell you that there may be an imminent risk and some parts of your portfolio may be at risk of severe losses. So I think that's what at InvestorLed we call the portfolio co-pilot, which essentially makes that assessment. I think that is quite promising. A second example, if I may, is on the performance analysis that also, Stefan, you were mentioning. I think there, it's more, I guess, the LLM world that really is best suited to that. If you think about a portfolio and you've got, I don't know, 25 stocks or 50 stocks, and you know some better than others, and you sit on the Saturday morning and you want to review your portfolio, and you think, oh, gee, I'm gonna have to, all this pile of information and all this news that I need to review. I'd rather do something else on my Saturday morning. So think about an engine that looks into the guts of your portfolio and go and fetches the relevant information, the factors that are driving what's happening inside your portfolio, and providing context. I think that's also another great example. And again, we're deploying these tools and obviously invite users to see it for themselves on our platform. We're running demo portfolios so people can see how that world can look like when it starts looking at the inside of one's portfolio. So I think that's the things I would think about when thinking about how AI can enter the world of portfolio management and being this portfolio co-pilot.
Exciting times. Thanks, Jack. Last question for Angeline, and if you can keep it short and sweet, again, massive bonus points. Does AI make it easier or more difficult for retail investors to beat the market?
I will definitely hit that target of a short answer, but I just want to say to Jacques that I too would prefer to be doing something else in the morning. So I am a great advocate for AI liberating that scanning, filtering, the heavy lifting that all of us have to do, but would rather not do. And how nice would it be if we had something that did it in a very easy to digest way, easy to understand. That will make it easier. So in response to your question, Stefan, AI in that form would make it easier for retail investors to not only beat the market, but also be able to allow them the ability to make quick decisions and not sit on something for months on end, right? It allows investors to have the tools to cut out that noise. However, I must also add that with AI comes a lot more noise, if you like. It will squeeze out inefficiencies, but it doesn't take out human irrationality. If Jerome Powell came out tomorrow and suddenly said there'll be a rate cut this December, it's not going to motion anything for you unless you've already designed that into your trading capability. I just want to end with saying that is normally used in IG. Edwards Deming, I think he was an American statistician, and he said, "In God we trust, all others must bring data." So back to that point again about data, it's wonderful. We have these tools, for example, getting the AI to hunt down not just the UK, for example, or the US, but an entire universe of financial instruments with your parameters. For people who don't have that quant knowledge, that financial coding background, you're able to go out there and do this, like what George was saying. It liberalizes the space. And how exciting would that be? So I'm looking for all these opportunities. There are risks as well, but I think there are a lot of opportunities out there too.
Thanks a lot. Lots of great quotes there. Okay, now so let's move on to the Q&A. So please keep asking the questions in the chat. So let's start with a question from Clifford. Does AI study past history of an investment to be able to predict when to invest or sell in real time? Maybe George, you want to have a go at that one.
So I think this kind of goes hand in hand with what I'm saying. With it's just that I think retail really has to understand you're not going to compete with hedge funds in these spaces. There's a race to the internet in New York, for those who don't know, to the fastest internet speed with these hedge funds in 14th Street, and they're buying these more and more expensive buildings. Like, if you're thinking about trading and speed and that kind of thing, that's won already by the hedge funds, and you just need to get that out of your head. You're much better off, and what I would more expect. And yes, to do the other part, it studies everything. The most popular models in a lot of these things are GANs, which compete against themselves to learn, as well as LSTMs, which take into account short and long-term information. They're absorbing much more than you can ever think, but you're not going to have access to the best ones. What we're focused on, and what I think people really should focus on, is I think there's tremendous opportunity, because computers are notoriously bad at poker versus something like Go. And that's because they're not very good at understanding deception or engaging in deception yet. So the kinds of things that we focus on, and a lot of people should focus on, is trying to figure out where things like high frequency traders are pointing on day, week kind of scales, because that's where retail can really thrive. But anything about this, trading, we can beat hedge funds in nonlinear equations competitions, that if you have less than millions and millions of dollars, think you can get access to the best trading tools. You can't. I'll tell you that right now.
Thank you, George. Next question from Gail. Scale is key for this to have impact. Since the power of AI is based on its data set, how much data do you think will be required to help retail investors make better decisions? Is this something a single firm can deploy, or will a new deployment model emerge? Maybe, Jacques, this is for you.
No, I think the data is critical. I think the quantity of data is not necessarily the answer. I mean, there is a long-standing body of literature that has compared models with very, very large data sets with more parsimonious sort of data sets. I think the way that I approach things is that you think first of the question you're trying to answer, and then use the tools that are best suited to answer those questions. And then you find on the way that you will need the data that needs to answer those questions. In the work that we do, we are essentially modeling based on the very strong relationship and robust relationship that exist, and build on these. And so in a way, you can work yourself through a simplified framework that will end up already being very useful if it is systematized, and if it is using the data that you believe is of quality.
Thanks, Jacques. Next question from David. What are the major risks of utilizing AI in a retail investor portfolio right now? I see opportunities in analyzing the risk in the portfolio, but has enough time passed to validate investing/trading strategies powered by AI? Maybe Angeline?
Well, it depends on your appetite for risk, really. Many of these companies offer, parameters that you can set. For example, and also how you voice your parameters is equally as important. For example, there's a company called Algoriz. They allow you just to tell the AI your parameters, and it will build it for you, but you have to kind of go through the testing phase. There's also another outfit called Trade Ideas. They've got entry and exit signals, but yet again, it is up to you to design exactly where and when you want to execute that. So I would say that there are risks, but it depends on your appetite for risk and what your parameters are, where you are in your investments sort of cycle. I mean, people tend to take more risk when they're younger, and then sort of, take medium risk, and then less risk when they're older and they want to protect their portfolio. Pay attention to, there are quite a few interesting companies out there that will also help you link up API wise. So for example, if you really have a wonderful trading strategy, there are many companies, including IG, that have API capabilities. NinjaTrader is another one. At IG, we do offer algo through a third party. So we use PRT, MT4. But the risk really depends on what you're after and whether you set your parameters right. I hope that's a short answer to a very long point.
It was indeed. Thanks for that, Angeline. Okay, George, what are the top three? Oh, the question just did. What are the top three capabilities AI provides to the retail investor?
I think the first is speed. I think when we are talking about, especially like, and I make the distinction, good tools, I would say, to especially understand where institutions are betting and putting their money, that can happen at a lot more speed. We've been able to get up to every 3 minutes on our net option sentiment number. And I think that's just something as hardware has gotten faster and data has gotten more and more ubiquitous and cheaper. That's, I think, the first thing. The second is flexibility. And I think that's building flexible systems is not what everybody, always cares about. But I've seen a lot of questions about, say, black swan events. And it's kind of funny, people ask how to hedge against black swan events, which are, rare, unpredictable events. And you can't do that. But what you really can do if you have good flexible tech is something that, like ours, looks at its own predicted accuracy, the volatility in the models, things like that can tell it when it needs to evolve really quickly. So that kind of goes up well with the speed, the flexibility, because while you can't predict that event, you can, especially retail tools are more flexible and responsive than ever. And I would say the third thing is malleability and customization. There's a lot of good tools out there and a lot of things that we're thinking about in terms of just like what your strategy is, whether it's something that you want ESG, you want to eliminate certain kinds of companies, you want to say, have more kind of semantic search capabilities. One of the new things we're working on is a new way to look at sectors where you can ask for like AI stocks in a way that's, even better than kind of what Google gives you. But I think that malleability thing is something that we are just starting to scratch the surface of. And, you see it with kind of like LLMs, kind of your customized experience with them. There's more and more of that coming out. But those are the three things that excite me the most.
Love it. And you just finished your answer exactly at the end of this discussion. So thanks a lot for the perfect timing. So that's a wrap for today, everyone. Thank you so much for tuning in. Finimize is all about community, and it's all about helping each other become smarter investors. And that's never been more important. So hope you enjoyed today's session. Thank you so much to our three speakers on this last session. And make sure to tune in for tomorrow's session, which starts at 1 p.m. GMT, Uncover the Art of Risk Management with Stash Away. So have a great night, and thanks everyone again.